Hi, the end of financial year, 30th of June, is just around the corner. And we've had lots of questions from clients recently saying, but what are the best tax deductions for business? So we've put together our top 5 tips for you, including how you can have your business pay for your holiday. If you're not in business to have fun, then why are you in business? If that sounds like something that you might be interested in knowing more about, then please stick around. Thanks so much for joining me. Appreciate the time to find out about our top tax tips and a couple of admin extras at the end. Apologies for my scratchy voice. The flu in the office has finally caught up with me today too. So our first tip is around the instant asset write-off. So in years gone by, what would happen is that you would purchase a piece of equipment, say, or a vehicle, and your accountant would say, and we need to depreciate that over many years. And you would get the deduction over consecutive years until it's essentially written off. What the government is saying, as of the 2nd of April, up to $30,000 you can claim this year for an asset that you're purchasing. Now, it doesn't have to be one asset, it can be many assets if you've got the funds to do that and the cash flow that's available for that. It can be second-hand or new assets that you purchase, and the requirement is that those assets are either in use or installed and ready for use as at the 30th of June 2019. Now, some of the examples that we've had from our clients or that we've assisted them with have been around motor vehicles, tradies who are buying utes or vans for servicing their fleets, as well as pieces of equipment that are being used in some factories, and things like servers for IT purposes, as well as lots and lots of computers. So that's something that you can take advantage of in terms of the assets that you're purchasing. If you, in the next week, decide that you have the cash flow and the ability to go and purchase an asset, it'll obviously get fully written off in this financial year. So maybe then do your tax in July to your own advantage. Okay, tip number 2, pay yourself super. Your super contributions that you make for yourself are tax deductible. Now, there is a cap of $25,000, and yes, you can't get to that money until you reach retirement age, but don't worry, you're going to get there anyway. So it's just held there in trust for you. So what are the rules around it? Again, $25,000 is the maximum. After that, there's penalties and whatever. You don't want to exceed that. That includes the amount that you've received from your employer through your employer's super or salary sacrifice. And so it does require a bit of calculating. Now, you also have to make sure that your super fund receives it before the 30th of June and that you've lodged a notice of intent to deduct with your super fund. Now, if you are 65 or you are earning over $250,000 per annum, it's a little bit different, but essentially it's still an absolutely good way to have a deduction, a tax deduction for yourself. Okay, number 3, defer your income. Now, obviously, some businesses, this is easier to do than others. But if you're on a cash basis, if you're accounting on a cash basis, then you probably want to receive that income on the 1st of July rather than the 30th of June, because the 1st of July is going to force it into the next financial year. Now, that doesn't save you any tax in overall. What it does is it defers it from one year to the next. And then, things might be different depending on how the earnings go in the following year. Now, if you're on the accruals basis, then you perhaps don't want to issue those invoices that you were saving until the 30th of June. You might want to save them until the 1st of July. And it does exactly the same thing. It recognises the income in the next year rather than this year. Now, that's not always appropriate for every business, but again, talk to us and we'll be able to help you decide whether that's a strategy that's good for you or not. Okay, number 4, Now, this is probably the least sexiest of all the tax deductions, but is by far the most important. Get your business structure right. Now, there are a lot of different vehicles that we can use to structure a business, but ultimately the structure of the business is determined by who you are, what business you're in, and how your family is set up. Now, the best time to do that is at the beginning, but your circumstances change as time progresses. So you may start off as a sole trader and you may have a company to protect your assets, and then you might progress to a trust for tax minimisation, or there might be a combination of all of those, but no two situations are the same, and it needs to be based on what's best for you and is going to provide the best vehicle for you to minimise your taxes in the long term. So again, that might be something that perhaps needs a review, or if you're starting out, then ultimately this is by far the best way to save tax or tax minimisation strategy going forward. So consider your structure. Okay, number 5, and the most fun one of all, how do you get your business to pay for your holiday? Planning is the straight answer. Okay, you need to look at what is your business. It's not a new business, it's not a new thing that you're going to do in your business, it's your existing business. And are there conferences, are there symposiums, are there planning sessions or client meetings that need to be had in some other part of the world that relate to your business? So I'll give you an example. One of our architects came to me this week and said, hey, there's a building and construction expo in Sydney in March. Do you think that's something that I might be able to claim? And the short answer to that is, yeah, absolutely. The second part of his question was, well, what about the one in Las Vegas? Again, same answer. It's not about the location, it's about the purpose of the trip. Is the purpose supportive of your business? Is it that you decided that you needed to go to that conference because it's going to develop your business in some way? And for him, that absolutely was the truth. So some of the finer details are you have to have at least 4 hours a day to make that day claimable. Now, as we know, if you're going to go to Las Vegas or to Sydney, it's probably likely that the biggest portion of those costs are going to be your flights. So plan ahead, plan the tickets for what it is that you're going to that's for the business or in the nature of the business, as opposed to I'm going to go to Hawaii and then find something that matches in with that. Okay, so plan your tickets, book your tickets, plan your days. Now, there's no reason that you can't stay a longer period of time, but you need to understand that only a portion of that will be tax deductible. The business portion of that will be tax deductible. So that is the fun part. Find the things that you're interested in, find the things that you love. Most of our business owners absolutely love their businesses, and so going to an event or a conference or client meetings that are in support of that are also just as fun, and have some fun while you're there as well. Okay, the last 2 admin things. Firstly, trust distribution minutes. If you have a trust, then you are required by the ATO as a trustee to meet and to determine how the income for the year is going to be distributed. Now, that after your meeting, it needs to be minuted and signed, and that all needs to occur before the 30th of June. So just a reminder that is a mandatory requirement on trustees. If you have a trust through us, you would have also received a notice in the mail explaining that as well. Now, lastly, single touch payroll, it's just around the corner. 1st of July, it comes into force and is mandatory for any business that makes payroll payments. Now, we've been very fortunate that there have been a large number of clients that have come in, had training, helped us get them all connected and ready and understand the implications of what single touch payroll is bringing for businesses. Now, if you haven't had training, feel free to book in. We've got a couple more sessions this week in anticipation of the rollout or the final date of the 1st of July. Now, lastly, all of this information is designed to be general in nature, the specifics of which you would need to talk to one of our accountants or talk to me. Feel free to call the office and anyone can discuss these topics with you. Alternatively, if you're new to us and you would like to make a time to have a chat with me about whether we would be the right fit for you, please do that as well. As we're making more videos, we will make them available to you. Please pick and choose which ones suit you. Overall, we wish you every success in your business. Thank you.